Well, Armando and Cillein, it's very nice to see you, and I trust you're, well, you seem to be in the same room that I saw you in last week and the week before and the week before. I trust you're keeping well.
Thank you so much.
So, with BEPS 2.0, there's a lot of discussion about the subject to tax rule between people. And I'm just curious, Armando, subject to tax, how significant is that in the Mexican perspective?
I believe, Rodney, that is a very significant perspective in Mexico due to the fact that in some specific treaties in the past, Mexico have negotiated some more or less the same spirit as subject to tax rules, saying that we cannot apply the tax benefits when there is an income subject to a preferential regime, a reduced rate, or there is a credit or a reduction that is applicable that reduce the in general terms, the tax that has to be paid in comparison with the general rates that or the general system that is applicable in a given country. So in that regard, I believe that Mexico will follow definitely this situation in relation to that. What is interesting to see is what happened with these treaties that we have this specific clause, which is similar to subject to tax rule. And definitely, because in that regard, the limitation of the treaty is absolutely. So in that regard, what I want to say is Mexico will apply entirely the withholding tax provided in the income tax law instead of to try to reach a minimum tax. And this is interesting to see what will be the position in those treaties if they want to renegotiate that, because it seems to be that it cannot be lived together in relation to that. And well, of course, this is something that we need to see the pressure, because taking into consideration certain particularities of the US tax reform, actually the new measures are in the sense that we need to adopt these new provisions in relation to BEPS 2.0 Pillar 2 in order to avoid to be affected by the general US rules that now have been proposed by the president, and see what will be the effect in the organizations and business in Mexico, definitely.
That's really interesting, Armando. So in the Mexican context, then, subject to tax, not new ground. You've been living with that concept, at least in some of your treaties, and your point about how that just disapplies treaties, and then how will this coordinate full withholding or a minimum tax type concept, how that will play out is something yet to be seen. Must be a topic of discussion with clients these days.
Definitely, because there are some there are like 10 treaties that have this special clause, and what we are expecting to see is what will be the final policy, and if the government probably will decide to drop those old clauses because are more aggressive and they are not in compliance at the end with the subject to tax rule, because definitely the drafting way and the structure is different, because probably you can have a regime in which everybody is below 15%, and those clauses are not applicable because it's the general regime. What the rule in Mexico that is contained in the treaty is saying, well, when you are subject to a preferential regime different from the general one that is applicable to any single resident. In that regard, with the Pillar 2, we will have a broader scope, but probably less impact, because we have to tax at the rate of the 15%. No, they said 7.5 or 9%, depending of the result of these negotiations, definitely.
Very interesting. And Cillein, how does that compare across the Atlantic and Ireland?
Yeah, I mean, I think, Rodney, that the subject to tax rule probably didn't get a whole lot of attention when it came out in the blueprint, and you almost be forgiven for forgetting that it applies before the GLOBE rules, the income inclusion rule and under tax payment rule. But I think the 7.5 to 9% that Armando just spoke about, that range of nominal tax rate, it's important to flag that as a nominal rate, not the effective rate, probably meant that from an Ireland perspective, and lots of other developing countries, that the subject to tax fell down the pecking order as an important consideration. And from talking to clients, really, it's been the GLOBE rules themselves, the income inclusion under tax payment rule, that have taken up more of the focus. Clearly, from Ireland, from an Irish perspective, the rate has been a key consideration. And as we know, the wording is at least 15, and Ireland has pushed back on that. We closed our consultation actually last Friday. The Irish government ran a consultation for interested parties, and definitely the focus on that was on GLOBE rather than subject to tax. I think the other key focus, getting 15%, but also the calculation of the effective tax rate, in particular things like deferred tax. They've been key considerations for clients that we're speaking about. There's a lot of complexity in that. And I suppose the other layer that's very relevant, especially in Ireland, given how disproportionate effectively are by US tax reform, is the current developments, Rodney, on your side of the pond, which I know is a developing area. Even yesterday, we had some announcement on that. That's clearly a big issue for us and how they would interact going forward. So US tax reform and the OECD process, will they align, and will there be conformity is a massive issue that we're dealing with clients to see how that's going to work out.
So that's really interesting, Cillein. Subject to tax, important, yes, but perhaps the whole minimum tax system and then US tax reform are things that people are more focused on in Ireland today.
Yeah, definitely, Rodney.
And have you been seeing people start to model out the implications of any of these rules, or what are people actually doing in Ireland today?
Yeah, I mean, a little bit. I think that, waiting for more certainty on, firstly, will these changes happen, but also more importantly, the exact type of rules that we're going to have. And I think there was a lot to play for in this. I mentioned deferred tax earlier. I think that in particular, that is a key component. So I think there's probably been a little bit of hesitancy in one sense to delve too far into modeling as we wait for some final rules. I think high level modeling has certainly been done. And I know something that you pushed quite strongly, Rodney, has been the Kate model, the rapid assessment tool, which definitely has been very helpful. And I think more clients will jump on that bandwagon shortly as we're coming close to now having more of a consensus and some further guidelines and rules coming out from the OECD.
Well, just fascinating. So subject to tax, a key discussion topic in Mexico. In contrast, other events like minimum tax and potential US tax reform, more significant in the Irish context. Cillein and Armando, thank you very much for your time today, and I trust you're going to have a good week this week.